it's a fund that is growing. It has, about 10,000 units that are in some form of development right now, but easily I can see that being 100,000 units in just a few years.
We'll talk about the DLP Buildings Communities Fund, right? And let's just dive into a little bit about what you're liking about the opportunity in the future, what we're seeing now with even maybe just alleviate concerns with cost to build. I know interest rates have also obviously increased drastically in the past year. But talk about how the DLP Buildings Fund's outlook is looking for you and what you like about it.
Well, I'm an investor in the Building Communities Fund, and I love the fund itself. And I think it has great prospects. First and foremost, we can build in today's environment. We can build brand new workforce affordable housing cheaper than we can buy an existing building in different markets, right? So if we can go in there and get a brand new 2023, 2024, 2025 building with brand new units, brand new appliances, brand new construction, and own that at a better basis, right? It's an easy no-brainer. So I like it from that perspective. I also think long-term it's going to produce the highest returns of all of our funds because of the fact that we can acquire it at a better basis. And again, it's a fund that is growing. It has, about 10,000 units that are in some form of development right now, but easily I can see that being 100,000 units in just a few years.
Fantastic. Now dive into that model a bit of, it's like a REIT, right? Where you're investing into shares that goes and builds these assets, right, over a period of time, and a chance to diversify, have multiple assets, right? But also the ability, in case you need to raise your hand, you might need to get out in a year, or at least a portion of that. So talk about the rhythm and the pace of an investor's piece of capital if they're investing in that, and how that might go well for their, I call it maybe once a year liquid, right, is a good way to put about it, right, versus some other asset types that are maybe specific, but are 3 to 5 years or 7 to 10 years, but it's only that one project, and that lack of diversification could put someone at risk.
Yeah, so you hit a lot of the hot buttons and why we love our funds and how they're structured. Interestingly enough, the Building Communities Fund is the only of our 4 offered funds today that is not a REIT, but it is something we're looking at potentially changing, which is just simply a tax election. But our housing fund, our lending fund, and our preferred credit fund are all REITs. The beauty is they're all similarly structured in the sense that you are not investing in any particular asset or property, right? So similar to a syndication where folks invest in one property, that can go really well, but it can also go really poorly. And we've seen a lot of instances where investors lose money because of that one asset. The beauty of our funds is you're investing in a fund with a pool of assets, whether it's a pool of loans in our credit funds, the lending fund and the preferred credit fund, or a pool of properties. So we have communities. Today in the housing fund, we have 62 communities. We now have, probably about 10 communities in the Building Communities Fund that are all in that process of some stage of development. And it's a beautiful thing because you have diversification, you have geographic distribution, all of which are very important from a risk mitigation standpoint. And then to the point of access to liquidity, all of our funds are liquid. Our 2 credit funds have 90-day liquidity. You can get out anytime with 90 days notice. And then our housing fund and our Building Communities Fund offer annual liquidity. So you can get out in whole or in part every year. You could take a little off the table, or you could take your whole investment back out. Very unlike most real estate funds where you are locked out for 3, 5, 7 years.
I absolutely love that the value of every day and every way you get a little better, in the sense that you guys are looking at ways to improve not only the diversifying the risk, lowering the risk, but improving the processes and the outcome for the clients. If they need or want some liquidity, they have some form of liquidity, right? If they want growth and big opportunity, they have that in the buildings fund. Of course, the lending fund has consistently returned over 10%. Knock on wood, it continually, right? And it's a great opportunity to get that cash flow coming in right away.